Identifying stocks that promise not just growth but longevity is a smart strategy in the investing world. We will explore and expose you to several stocks that stand out for their potential to perform well over time. Whether you're new to the stock market or looking to expand your portfolio, understanding which companies offer stability and growth will help you secure your financial future. Before introducing these stocks to you, here's a tip. Knowing the criteria involved in selecting buy and hold stocks can put you ahead of your game and on the right track. So, how can you do this? Look for solid companies with a history of strong performance. It's like choosing a reliable car. You want something that won't let you down when the road gets bumpy. Next, you should focus on those with consistent earnings, good management, and the ability to ride out economic storms. Simple yet effective, this approach helps build a portfolio that's tough to beat. Moving on, the number one stock on our list is Hindustan Unilever, also known as HUL for short. Think of all those household staples you grab at the grocery store: shampoo, soap, maybe some yummy ice cream. There's a good chance HUL is the company behind those goodies. They're massive in India, one of the biggest consumer goods companies around, and they've been around for ages, over 80 years. That's a long time to perfect a recipe, both literally and figuratively. Now, what makes HUL a stock to consider buying and holding for the long term? Well, a few things. First, people have got to eat and clean, no matter what the economy is doing. That means HUL's products are pretty recession-proof. Plus, they're constantly innovating and coming out with new things, which keeps them ahead of the curve. Think about it. How many different types of Dove soap are there these days? From cucumber and melon to menthol and oatmeal, they've got something for everyone. That kind of adaptability is a good sign for a company's future. Here's another reason to consider HUL. India's population is booming. That means more and more people will need everyday essentials, which is exactly what HUL sells. So, as India grows, HUL will likely grow along with it. Of course, no investment is a sure thing, but HUL seems to have a lot going for it. A strong brand, a stable market, and a bright future in a growing economy. The second stock to buy and hold is Amazon. In 2024, Amazon is shaping up to be quite the juggernaut for long-term investors. Ever heard how Amazon's always been a bit of a chameleon, constantly adapting and growing? Well, they're ramping up their game even further.
Because the stock is not the company, and the company is not the stock. And so as I watched the stock fall from 113 to 6, I was also watching all of our internal business metrics: number of customers, profit per unit, everything you can imagine, defects, etc. Every single thing about the business was getting better and fast.
With its significant investments in cloud computing and digital advertising, Amazon is not just a retail giant, but also a tech powerhouse. Now, imagine having a slice of that pie. Investing in Amazon means betting on its continued innovation and expansion into new markets. It's like backing the team with the smartest players and the best playbook in the league. Amazon's making strategic moves left and right, from enhancing its AWS cloud services to boosting its advertising prowess, which is set to skyrocket its free cash flow. With lower operational costs and increased revenue streams, Amazon's financial health is looking robust. For anyone holding on to their stocks, it's not just about waiting out the storms, it's about thriving in them. So, if you're eyeing a stock with its fingers in many profitable pies, why not consider Amazon as your next move? After all, diving into their stock isn't just an investment, it's a partnership with one of the most dynamic players in the market today. Third on our list is Nvidia, NVDA. Have you seen those crazy, powerful graphics cards that make video games look like real life? Yes, Nvidia is the brains behind those. But they're not just about gamers anymore. Nvidia is also a leader in artificial intelligence, AI, and that field is absolutely exploding right now. We're talking self-driving cars, robots that can do surgery, and even creepy cool AI art. Also, Nvidia makes the chips that power all that fancy technology. Here's what makes NVDA a stock to consider for the long haul. Its growth is insane. We're not talking baby steps here. In the second quarter of 2023, its revenue doubled. That's right, doubled, to a whopping $131.5 billion. And its data center revenue, which is all about that AI boom, skyrocketed by 171%. Those are some seriously impressive numbers. Sure, there have been some bumps in the road, like a recent ban on selling certain AI chips to China, but analysts seem to think this is just a short-term hurdle. Nvidia has a knack for exceeding expectations, and with the way AI is taking over the world, well, not literally, it seems like smooth sailing ahead for this tech giant. The fourth stock is Sofi Technologies, SOFI. Have you ever struggled to manage a million financial things at once? Student loans, bank accounts, investing. It can feel like a financial circus. Well, Sofi Technologies, SOFI, wants to be your one-stop shop for all that craziness. They started out helping students with loans. Remember those? But now they're like a financial supermarket. Need a checking account? Done. Want to invest some spare cash? SoFi's got you covered. They're all about making your financial life easier. Well, right now, they're growing like crazy. According to a blog post from Investor Place, in the third quarter of 2023, SoFi not only added a massive 717,000 members, showing a stellar 47% growth from last year, but also saw its deposits shoot up by $2.9 billion. SoFi has evolved into a full-service financial hub since its humble beginnings as a student lender. And get this, its net interest income doubled to $345 million. Sure, SoFi isn't quite making a profit yet. That might scare some investors, but the legendary investor Warren Buffett once said, "Be fearful when others are greedy, and greedy when others are fearful." Maybe SoFi's a chance to get in on something big before it explodes? With the stock trading at $7.49, climbing 66% year to date, and inching closer to its 52-week high of $11, SoFi might just be the under-the-radar stock you've been looking to hold on to.
The stock down 9% despite a strong increase to guide. What is the street taking from this?
Yeah, I think it's important to focus on the results and what that means for the full year and then what that means for our 3-year outlook. So in the quarter, we achieved 26% year-over-year growth in revenue, $581 million. We had 25% EBITDA margins. We grew that almost 100% at $144 million. More importantly, we have grown tangible book value per share 16% sequentially by about $600 million. We had record deposits of $3 billion and really strong overall performance. The most important thing about those trends that I'd point out, and the reason why 2024 is a transition year, is the growth was driven by low capital, high return businesses, our technology platform business, and our financial services businesses.
What do you think? Is it time to bet on SoFi's future? Before moving further, we would like to introduce you to something. Now, if you want to get your feet wet in the stock market without the hefty fees, we've got some exciting news for you. The first link in the description below is your gateway to commission-free trading. That's right, there is no more paying to play. Plus, when you open a free account through our link, you can get free stock valued up to $1,000. And here's something even more incredible. Earn up to 4.33% interest on your uninvested cash balances, instantly available. So don't wait. Click on that link, start investing today, and maximize your potential returns. Back to where we stopped from. The fifth stock to buy and hold is Microsoft. Come on, who hasn't used a Microsoft product at some point? From Windows on your computer to slaying dragons in a game with Xbox, Microsoft has been a tech titan for ages. But is Microsoft, MSFT, a stock you might want to hold on to for the long haul? Let's see. First, Microsoft isn't going anywhere. They're practically a household name, like that comfy pair of slippers you love. People rely on their software for work, school, and even just hanging out online. That kind of brand loyalty is gold for a company.
I think there's excitement, Sarah, but I think it comes in the software. It's not really the hardware. Hardware will make it easier, as Michael Dell said, to be able to hit a Copilot button and tell you your next meeting and things you need to know about traffic or weather or whatever you need to do to help you through the day. But I think the magic's still coming in the software. Microsoft and Amazon are leading that push in the enterprise. Google and Meta are leading that charge in the consumer market. So we are very excited. Microsoft's our top pick. We think the stock's going to $550 on $16 earnings power. And this is just at the beginning of the AI push. We think Microsoft has a huge runway. They've infused AI from security to infrastructure to applications.
Second, they're constantly innovating. Think about it. They're not just about dusty old computer programs anymore. Cloud computing with Azure, super powerful gaming with Xbox, they're keeping their finger on the pulse of the tech world. Just recently, Azure's revenue rocketed up by 31%, outpacing competitors and carving a larger slice of Microsoft's cloud market. This isn't just growth, it's explosive growth fueled by AI innovations and strategic moves into emerging markets. Microsoft is also making major investments to enhance cloud and AI infrastructure in countries like Malaysia and Thailand, ensuring its technology reaches every corner of the globe. Sure, there will always be bumps in the road, but Microsoft seems to have a knack for overcoming them. They're a stable, well-rounded company, which can be great for a long-term investor. Let's talk about the sixth on our list, Apple, with the acronym AAPL. You know, the company behind those sleek iPhones and fancy MacBooks everyone seems to have. Well, there's a reason Apple is such a giant. Here's why it might be a stock to consider holding onto for the long run. Apple has a cult-like following. People love their products and are always willing to upgrade to the latest iPhone or iPad. This brand loyalty is a goldmine for Apple. They can release a new phone with a slightly different camera and people will line up to buy it. In the first quarter of 2024, they sold over 80 million iPhones alone. That's a lot of phones. Next, Apple isn't just about phones anymore. They've got their fingers in all sorts of pies. Computers, watches, even streaming services with Apple TV+. This diversification means they're not reliant on just one product to succeed. Their other products can pick up the slack if phone sales slow down. Also, Apple sits on a mountain of cash. We're talking hundreds of billions of dollars. That means they can invest in new technologies, buy back their own stock, which can boost the share price, and keep their shareholders happy with dividends, like a little bonus for owning a piece of the company. Sure, no company is perfect. However, Apple has a proven track record of success, a loyal customer base, and a ton of cash to keep innovating. Now, to the last stock on our list, let's talk about Meta, formerly known as Facebook. Yes, the same Facebook you used to scroll through pictures of your friend's cat or argue about politics with your uncle. But here's the thing. Despite all the memes and news stories, Meta is a massive company with some pretty impressive stats. So, could Meta be a stock to hold onto for the long haul? Well, begin with this. Think about how many people use Facebook, over 3 billion monthly users worldwide. That's a crazy number. And it's not just Facebook. Meta owns Instagram, WhatsApp, and even Oculus for virtual reality. They basically have a stranglehold on how we connect online. Another thing is, Meta makes bank on advertising. Think about all those targeted ads you see on Facebook or Instagram. Yes, that's cash flowing into Meta's pockets. And with billions of users, that's a lot of potential customers for advertisers to reach. Now, Meta has faced some challenges, like privacy concerns and competition from TikTok, but they're constantly innovating and trying new things, like the metaverse, which is kind of like a virtual world. So, is Meta a sure bet? No investment is. But with a huge user base, a strong advertising business, and a focus on the future, Meta could be a company to keep an eye on if you're thinking long term. Before we wrap up, let's introduce you to Workity.com. If you're looking to promote your business, find the best deals, or even post job vacancies, Workity.com is your go-to platform. It's a free marketplace to sell items for free, get free company directory, post free ads, and much more. Whether you're in the UK, USA, or anywhere globally, Workity.com caters to all your business needs. So don't forget to check out the site for all your advertising and free business directory listings. If you found this video helpful, folks, remember to do all that good stuff. Like, subscribe, hit that notification bell, and leave a comment. We would love to hear your thoughts on those stocks we discussed. There's always more to learn in this crazy, exciting world of finance. Also, please share this video with anyone you think might find it valuable, and check out the next one in the series.